All right, everyone, it's time to begin the next session, which is about designing contextual finance where credit, commerce, and choice intersect. For the same, I would request the moderator to join on the stage, please. Ms. Ipsita Sur, Head Financial Services at National Payments Corporation of India. Let's have a huge round of applause for Ms. Ipsita Sur. Now I would request speakers to join on the stage, please. Mr. Anurag Sinha, co-founder and CEO at OneCard. Let's have a huge round of applause. Mr. Mohit Bedi, CBO, co-founder at Kiwi. Mr. Pankaj Gadgil, MD and CEO at Aditya Birla Housing Finance and Head Digital Platforms and Payment Strategy, Aditya Birla Capital. And Mr. Sujith Narayanan, founder and CEO at FI Money. Let's have a huge round of applause for him. I would request Ms. Ipsita to kindly begin the session.
Thank you so much for that introduction. And I'm delighted to moderate today's panel discussion on contextual finance, where credit, commerce, and choice intersect. So we live in a world where finance no longer exists in isolation. So your payments, lending, commerce, they are increasingly getting woven into everyday consumer journeys, whether you are shopping online or booking travel or maybe managing your savings and investments. So basically, so contextual finance, it essentially focuses on ensuring that the financial services are delivered exactly when and where it is required, depending on the user's specific context. And with this comprehensive and ultra-personalized approach, it goes a step beyond embedded finance, because embedded finance is what we kind of popularly talk about a lot. So it goes a step beyond embedded finance, often referred to as contextual banking, because it ensures that the right product is delivered to the right, financial product is delivered to the right consumer at the right moment, not just the right time, at the right moment, through the right channel. So, I mean, look at this scenario, like you're booking a late night cab on Uber. You get a nudge, at the time of confirming the booking, you get a nudge that you can pay ₹5 for a personal accidental insurance. Or say if you are kind of underwent some tests at Apollo and Fortis, and you kind of at the time of, payments, you get a nudge from your app, say a Paytm or a PhonePe app, where you're asked to convert, say you get a 20,000 bill. You're asked to convert that into, say, an easy EMI, a 3-month EMI at 12%, or with, say, Axis Bank and HDFC Bank. This would be how a contextual finance would work. Or if you are saying, sitting in a lounge somewhere, maybe at Adani Lounge in Mumbai, and you get a nudge, you get your phone flashes that, top up your Forex card at zero cost. So that's how, contextual finance is expected to work. So today's discussion, it is basically all about, blending credit, commerce, and all into, seamlessly into finance. In fact, one of the recent industry reports, it said that digital platforms who are into e-commerce, travel and mobility, they are expected to cater to around 400 to 450 million consumers by 2030. And which is additionally, and contextualizing embedding and contextual financial services into these apps are expected to generate close to about $10 to $15 billion of revenue. Now with that, I come back to the panel, and we have with us 4 distinguished speakers who represent each of these puzzles, missing pieces of the puzzles, which is your credit card, credit, payments, commerce, lending, wealth management, insurance. So all of so these 4, they actually cover all of these aspects of financial services. So with that, I would like to kind of begin with the first set of questions. And my first question would be to you, Anurag. So basically, with the rise of AI, predictive analysis, and big data analysis, people expect finance to kind of blend seamlessly into their lives. So what role do you think contextualization, AI and analytics will play? So how do you think credit card industry will evolve with the rise of AI and big data analytics, predictive technologies?
Thanks, Ipsita. Pleasure to be here. In fact, credit card is a very interesting product because it is not an end financial product. It's a means to do something. I mean, you take personal loan because you want to buy something. You take a home loan because you want to buy a house. But you take credit card because you want to dine, shop, travel. So the end use case actually is more important. That's how it has always been. And it's pretty complex because you have a payments angle to it, you have a credit angle to it, but more importantly, consumer is more interested about the engagement. What am I getting derived out of it? So, and the example you were just quoting, some of the examples you quoted during your opening remarks. So, product bundling has been around in credit card for many years. Like you buy something and convert into an EMI. You were traveling and you got an insurance along to it or a warranty. But what is happening is today, because thanks to the data sets which the payment systems are generating because of the scale and also the compute available for us to mine that data and actually create contextual context to it, can really drive next level of experience, both on the risk side as well as on the engagement side. Because many a time we end up only thinking about just consumer engagement. Friction reduction is also a very big part of transaction enhancements. For example, can I figure out not to decline this transaction? Can I make sure that for customers who just started their journey with a credit card, and usually most of the banks will have a much more stringent auth controls on that. Of course, affordability is a very, very big play to, to solve for. And the way to look at in the context of contextual is the transaction belongs to both issuer and the merchant. Now, when the consumer is doing transaction, it belongs to merchants, but pre and post is largely with issuer. And issuers usually have much more touch points because they aggregate data across merchants. So a lot of us are working many use cases to drive much better context of transactions to that. You spoke about healthcare. It's a fairly interesting category, very, very underserved in credit cards compared to things like dining or travel, which are very innate categories for us. And we have done many work with the merchants to integrate that. But imagine like now, if you talk about a younger generation of customers, healthcare is becoming a very, very important category and a very recurring category. People are saying, I don't want to, I want to do test every quarter. I want to do every test every 6 months. And I want to actually eat more supplements and vitamins so that I don't have to eat medicines. Now, suddenly this from illness to wellness journey becomes a fairly big context for someone to design for. So all of this is possible because the data is available, and payment systems and credit systems are the best way to solve for it.
Great, thanks. Thank you so much. So affordability and reducing friction, contextualization also plays a part there, and EMI, of course. EMI is the driving force for credit cards. So when we talk about, again, contextualization, contextual finance, payments have, of course, been the backbone of, now with UPI, UPI has been the backbone of contextual finance. In fact, UPI clocked close to 20 billion transactions last month. And everything, that is happening on UPI, be it SBMD, single block multiple debit, auto pay, UPI circle, everything, that is getting launched is with a context, with a specific context. Similarly, when we talk about EMI, it is said that it's a stat I heard that about 20% of credit card spends are happening through, as in revenue, so the 20% spends on credit cards are coming through EMI. So even EMI is getting contextualized instead of, the static QRs where they give the standard offers and everything to the consumers. It's more and more about, making those offers. If I spend more, I get a different offer from the issuer. If somebody spends less, they get a different offer or a different, maybe, interest rate. So moving on, Mohit, Anurag spoke about contextualization in the world of credit cards. You have been, Kiwi has been, the forerunner has been the forefront of credit card payments on UPI. So how do you see contextualization play a role in the payments and in the digital commerce journeys?
So thanks, Ipsita, for that. See, contextualization, let's try and understand, it means तुम्हारी life seamless होने वाली है, correct? And UPI has various products, and when you make a payment, you right now क्या universe हो रखा है कि you tell the customer you need to pay through savings, through credit cards. Now that you have EMI, there are various auto pay products, etc. Everything. See, contextualization in payments is happening as we speak. It's still quite a distance away. That it will have its own brain, right? Payments is supposed to have its own brain in this new environment because technology is developing. So right now, we also see that most of the, let's say, electronics transaction, कि मैं iPhone खरीदने जा रहा हूँ, and my app knows I'm in an iPhone store, and I'm buying an iPhone. Why do I need to give him an option of savings, etc.? Why don't I give him an EMI option? So those intelligent stuff will start happening very soon. Because there are products, obviously NPCI has been in the forefront of creating it. But those things will start, like if there is a P2P transaction that is happening, my Nariyal Pani guy is outside. मैं उसको credit card और EMI क्यों दिखाऊंगा? I will break away the journey and I'll tell him just put the pin and I'll start the P2P transactions through savings. So those intelligent stuff is what payments will develop very soon. And that intelligence is driven by the knowledge that the payment app will have, which is whether it is location, longitude, latitude हो गया, या आपका payment pattern हो गया, या आपका travel spend है तो मैं आपको credit card दिखाऊंगा क्योंकि आपको rewards ज़्यादा मिलते हैं. So and I will show that option because it is beneficial for the customer. So, and instead of segments which are, let's say, 3x3 matrix, each customer will become a segment because that is the amount of plethora of products that are there and knowledge about the customer is there. Right. So that contextualization is coming.
Right. So, yeah, intelligent intersections, that is essentially what is required. Pankaj, from a large institution's lens, because you span across insurance, investment, lending, and multiple, areas of financial services. What role do AI and contextualization play in deepening financial engagement and add value for your interconnected financial journeys for the new age, for the new wave of customers?
Thanks, Ipsita. And it's a pleasure to be here amongst friends, Anurag, Mohit, and Sujith. So to your question, I think when I was thinking about this while you were asking, I think we can bucket customers into 3 types, and it could sound very elementary. But I think the first type of customer is, I think, the aware customer, who knows exactly, where to go to buy, something. He knows, he goes to a branch of an NBFC or a, bank, goes to an app to purchase something. It's a very, clean cut, customer is very, very aware. I think the second category of customer is the customer who's looking for convenience, where what Anurag and Mohit spoke, which has got to do with the bundling, where the journey is, initiated by the customer, and financial services is a bundle. And credit card, I think, is a perennial, is a product which, provides for contextuality, which is perennial, and it can, stems into any journey which is there. So that's the right, mix for credit card. So all the journeys where, let's say on a Vodafone, if you are traveling abroad and, FX opportunity comes in, or, if you are, doing, you're debiting or crediting or you're buying, something, the invoice that you generate, invoice financing classically for an MSME, which will happen on an Udyog Plus in Aditya Birla Capital, are, some of these examples where bundling is, playing out very, very well. I think the third category, which is, in my mind, now going to build further, is where customers really have the latent need. And for all of us, at least all the 4 of us who are sitting there, who may not have a natural footfall, coming to their, specific firms, I think all of us in some ways, I think, are trying to ensure that the customer is coming onto the platform. The latent need of the customer is getting ignited by insights which are intelligent, and that is where, all the pre-qualified that we, keep on doing basis, the information that we keep getting from the customers, from the context, I think is the most important thing that is coming in. In that domain, I think when we talk about, you asked about how is it playing out in the entire financial services play, and Anurag spoke about health. I think we, of course, at Aditya Birla, for example, in our health insurance company, have taken that lever where we are talking about wellness first versus insurance first. And we actually reward customers if the customer remains fit. So wellness is a big driver. So we actually reward customers if a customer walks certain level of steps, he walks for specific number of kilometers, we actually reward him. So the recommendations clearly come in, from there. So I think the bit on latent need that is there, I think is moving on well. And in that dimension, I think the traditional financial services that are there, it's all morphing. And I think the entire play of financial planning and personalized assistance to customers are emerging. And we have several such solutions where you are able to track your portfolio, you are able to track your credit history, able to track your health with a simple selfie, so on and so forth. Yeah. So that is all feeding into buying decisions is what is evolving. And to summarize, I think what I see is the 3 I's are emanating. And when I say the 3 I's, intelligence is getting augmented with AI. I think all the journeys are becoming invisible. I think from frictionless, we have moved to something that we are all calling invisible. And third is, of course, we are becoming more and more intuitive. Contextuality is coming in more and more. So intuitiveness is driving a recommendation. So I think the 3 I's are playing out extremely well in the current scheme of things, spanning the entire financial services spectrum.
Actually, well articulated. I think that sums up well, 3 I's, intelligence, invisible, and intuitive. Yeah. I think that sums up the intersection of all of the financial journeys that you are kind of managing. Yeah. So, Sujith, we have spoken about context in all of these, industries. Specific to you, the wealth industry, the customers, they also want an ultra-personalized and simple experience when it comes to their investment journeys, right? So how do you see contextualization playing a role? Because your app has been so focused on the financial wellness of consumers. So how do you see contextualization playing a part in the long-term wealth building of a consumer, digital native consumers, beyond just the persistent transactional nudges that we have been used to over the last few decades by financial institutions?
Delighted to be here. I think all of us, when we started, we looked at the persistent transactional nudges and we said, how do you make it a lot more intelligent, or how do you make it a lot more intuitive? I remember a few years ago when we started, for instance, we indexed on curiosity and we asked consumers saying that, would you like to know how much you spent on shopping last year? Or how much have you spent on food ordering last month? And that curiosity led to the initial set of consumers coming in. Now, when I look back on it, it's about moving the consumer from financial awareness in some form or manner to financial wellness, as you said. That journey today is accelerated to a larger extent by the very simple fact that you have immense amount of data about consumers available, which they share with consent. And 2, AI has made it really simplistic for you to go beyond basic pattern recognition, right? And to assist in this, financial compounding from a wealth perspective, I think a few things will start emerging. One, we'll move from static to ambient. What I mean by static is today, all of us, we would set up a SIP or a mutual fund, a payment, and then shut it, forget it. Ambient is when it takes into account what's happening around you, what's happening with your finances, for instance, and starts optimizing real-time, quarterly, without a human being in the loop. The second is when you start migrating from dashboard to dialogue. Financial services is complex, and which is why there's always been a human in the loop, there's been an RM, there's been somebody to actually simplify it, right? The ability today is of being able to take copious amounts of data and being able to compute and give you very, very simple output. In my case, for instance, a few months ago when, all of the noise emanating from the White House happened and Trump decided hey, hey, India, I'm going to charge you 50% tariffs, right? Now, you could wait for the newspapers or you'd wait for economists at banks to comprehend this and come. What I did is very simple. I used my app and I exported my mutual funds into ChatGPT and I asked, which of my mutual funds is going to get impacted with the tariff? Look at specific industries which are overweight in my portfolio and tell me the impact, right? It would have taken an RM weeks. You would have gone to, an investment advisor, waited for details. That's context. How do you bring this seamlessly into the daily life of a user will define how fintechs, financial services moves from financial awareness to financial wellness in the truest sense.
Thank you for that perspective. So for sure, experiences moving from static instruments to ambient engagement or a dynamic engagement, if I can call it.
Ambient, it's like ambient music, right? Like it needs to happen in the background without you actually.
Yes, ambient, yeah. And you mentioned something about dashboard too. I missed that.
Dialogue, right?
Dialogue.
Today, if you think about
Okay.
most
It's
of the
motor from
information
tracker.
that we have,
Right.
any financial, app, bank, wealth management platform is, has a lot of dashboards, has a lot of charts. But for the average human being to comprehend this, right, unless you're a CFA with advanced understanding, for instance, the biggest challenge for a lot of us in the room is that we hesitate to ask a lot of questions, right? And the critical aspect of anything, from a wealth creation or even just being in control of your finances is having a nuanced understanding of what's happening, right?
Right.
I think the beauty of what we are seeing with AI right now is no one's judging you. You can ask any question, right? And over a period of time, what you will see is an enhanced learning which will happen, which will start reflecting in financial decisions that you end up taking. So that's the transition that we're actually seeing. And over the next 12 months, fintechs, financial institutions, I would say in the next few years, whoever capitalizes on this opportunity, right, from a contextual. So for me, this is context.
Right.
Can I add to this example?
Yes, of course. Sure.
So a simple example will be the dashboard. All of us will be very conversant with credit scores and
Right.
all apps bringing up the credit scores. We have also got a credit track product in our ABCD app. What AI has done is that those dashboards were not intuitive. They were there. They were always very good to look at, very informative.
Yeah.
But the movement from a tracker or a dashboard to a dialogue means one is of course summarizing the dashboard in simple English language. That is one which is coming up straight away. And the second is the questions can be asked in any language to the dashboard, and then it becomes very interactive as to how do I improve this? What are the 2 steps that I will do? Because people today understand that if the score is better, somewhere it is going to affect
Right.
positively or negatively.
Right.
So that is what has started to move with the contextualization and AI all coming together, the ambient or static to ambient that we are talking.
So, if we connect these dots, one thing is clear that the journey of the consumer has already become deeply contextual. But like we talk about, different apps, the experience is still, kind of scattered across apps. So consumers have different personas across apps. So basically they have different preferences, identities, and they may not have one persona in one app and another persona in another app. So the question is, how do we bring these fragmented personas together to give a single cohesive, financial experience to the consumers? So, probably any of you could try and attempt this question. What kind of strategies and partnerships do you think can unify these silos of scattered experiences to bring together a truly seamless, contextualized experience in the ecosystem for the consumer? Maybe, I don't know, Sujith or, Anurag, if you want
Yeah.
to. Sure.
So I'm like, even within product, there are various experiences, right? From customer service to fraud to offers to engagement to payments. And that's exactly because consumer wants a uniform experience. They say, I'm the same guy, why are you treating it differently? And as we go across beyond credit cards, so let's say personal loan or let's say any other product, they say, why am I being treated differently? Or cross-border transaction versus domestic transaction. There are just too many contexts to it. So I think what I think, as Sujith was saying, the data is actually helping us stitch the dots together from across. Because otherwise, what will happen? The depth of data available in one area was too less for us to take calls on that. For example, somebody who's doing a cross-border transactions and where second factor auth doesn't apply, can you still apply if you believe that the transaction was not being happening? So things like that. So we do that. Transit is a classic case. Right. In India, we have NCMC standard, which most of the banks have not yet implemented. But when Indians are traveling abroad like crazy, and almost every metro across the world, travel cards are, the same credit cards get used. Some are offline, some are online. How do you handle those kind of transactions? So, right. Definitely, and people want why can't I use the same experience all across? And then, of course, cross-border forex, lots of things just get added to that. Are there any offer available in that country and those markets? So I think data is just making all of this available. And the second thing is also the tools available. The beauty is the merchants are also investing in similar stuff. For example, if we need to recommend something using data, there are merchants. Fraud is a classic case. Typically in a AML scenario, transaction alert monitoring, usually it will take a human analyst to track an alert for almost 14 to 15 minutes. You can use it to almost 30, 40 seconds using a AI agent. And if the merchant is also supporting an agentic protocol, you can actually refer the case to them over that as well. So these things were not possible before, but now they're being, all of this is to reduce friction for the consumers. Right. So that's definitely is happening right now as we speak.
And you can practically draw, what Anurag was saying, well, actually draw the asset and liabilities of a customer with apography, with information, with signals that are coming in today, and with the ability of you to, of course, it's all consented information. You can actually draw out the asset and liability, and what's changing is now, it is no more the balance sheet which is going to come to you at the end of the year. If you are, underwriting, let's say, an entity, underwriting an individual. It is that information is also there, and during the course, a simple bill payment that a customer does augments the intention, and also the capacity to reply in a very big way versus only a bureau and a bank statement that was coming in. So I think all these variables are coming in for you to drop the asset liabilities of the customers very well.
Especially for small value credit. The summation of credit debit itself, remember, it will take so much time for us to do that.
So if you're a bank, you had to have the entire banking of the customer to draw throughput. That is not required today. A GST is a throughput enhancer. A payment transaction is a throughput enhancer or a understander of the throughput. So all those are the costly information that is available for you to think through and bring out solutions.
In fact, Sujith, we were discussing this earlier before this session, and you had some interesting perspectives on how you are unifying these silos.
So, Ipsita, I don't know if you want to ensure that there are no startups in India, right? Why would you standardize, right? If you standardize, imagine, right? Like every shopping app will look the same, every cab app will look the same, every payment app will look the same, right? So, okay, on a serious note, I think the standardization, if you think about it, should be the invisible layer. And differentiation is the visible layer, right? So let me explain that. Standardization, UPI, standardization, right? Yeah. You want the rails which are behind.
Probably just add the text box for people to write payment category or payment method so that we can mine the data later on.
Yeah. So in India, there is standardization if you actually think about. So account aggregators are standardized. Service, MF Central is a standardized service. Bureaus to a certain extent is, UPI is. I think we've got 80% of the information that you fundamentally need to create a very evolved consumer experience for any side of financial services, right? Which is unique in the Indian context. The 20% is the magic sauce, is the differentiation that, all of us strive, whether, a regulated entity, a fintech, right? That's what then leads to users gravitating because the differentiation built on top of a standardized layer creates those unique experiences from a user perspective.
So differentiation is welcome. Basically, we want contextualization, but we also want differentiation.
The commonality also
yes.
improves the democratization that has happened.
Right.
Also then actually removes the advantage that one may have, completely here. All the examples that he gave.
Yeah,
Same access to information, how do you put the secret sauce above it, I
Right.
think is the differentiator.
I think it lowers the barrier of competition as well, because anybody new can come in and build something, right, without having the legacy or the history, for instance, that you would have
Right.
otherwise had,
Right.
which I think is great.
So moving on to a more serious question into you, Mohit, with over 60% of digital lending now going to borrowers under the age of 30 in India, how do you see the balance between offering instant embedded credit and ensuring responsible usage?
You are right. Actually, we also see this data. Majority of our customers are obviously below 30 years, correct? And responsible lending starts from there. But see, ये generation का difference क्या है? Our generation was taking credit for crisis, correct? कि marriage है या कुछ है. This generation.
Are you calling marriage a crisis?
Marriage is a crisis.
Last place I want to do because my wife is in the audience. और वो
You're going to have a really good time at home today.
Dangerous waters.
That's why he's taking chances.
So we used to take it for crisis, but what we've seen in our data set is that this generation takes it for convenience, right? Whether it is more reward points or extra credit, etc., and everything. But actually, what we guys are doing is, you're right, we are giving a Ferrari or a fast car to the customers, but we are also ensuring good brakes and that responsibility during that contextualization, जो fine print में होता था, what we've started doing at least is now putting it upfront in the product. Like if you've used 1 lakh of your credit limit, then or your credit limit utilization is more than 20%, the product should nudge on the app itself that see you're going beyond your means, maybe you want to be careful about it, etc. So those fine prints will now become contextualization. Right. What it will do is it will make responsibility on the product interface itself, correct? That let's say you're buying a jewelry or gaming, for example, though it's banned. But let's say we were 30 days behind right now. That this is probably a risky segment that you're targeting. Are you sure you want to do this, etc. So what I'm trying to say is that what we fintechs at least are doing are giving great fast car or a great product to the younger generation, but it's become our responsibility to guide them not through fine print but through product interface, making it much better and more that it talks to them in their language. I think that's what's changing right now.
Great, thank you. So I was told that we have just 5 minutes left before we have to move 2 minutes from now. So maybe just a quick comment on how do you see, maybe if we fast forward, I wouldn't say 10 years from now because things are so dynamic. I would say 5 years, 2030. If you had to paint the picture of the future of contextual finance in India, how would it look like? Maybe a quick comment from each one of you before we open the floor for questions.
No, I think just two things. One, I think India is one of the most digitized societies, especially the current population we're having. They're much more sure about themselves. The data availability is massive and the infrastructure is coming. So there is no reason why we won't harness the value of it. My only prediction will be go beyond regular urban use cases to rural, to SMEs, to every part of the world. And incidentally, the scale at which we are building using open data structure like in India, many of the fintech companies will also take this to other parts of the world. That's what my 2% would be.
No, so mine is very quickly. AI is here. You can't avoid it, contextualization, etc. But what will change is that the new set of people will need a lot of trust building to start happening. I think there was a session on compliance and guidelines, etc. That scare will start coming in because we all keep saying कि data हमारे पास इतना है, ये है, वो है. AI पे जो डाल रहे हो वो public information हो जाएगा. You don't know where it is going. All that thing, everything, this data AI, the binding factor will become trust and it will become very important in the next 10 years.
I think, and just doing the future gazing, In numbers, I think the industry and contextual, I was reading, globally should move from 100 billion to 500 billion in the next 5 years. These are all data which is publicly available. India from 9 billion to 34 billion. So there is huge future which is there. I think the building blocks are in place. There is regulatory framework. Of course, RBI has released the free AI framework, which is there. The digital public infra, which was earlier spoken of, is also available. I think the customer intention is also there. It's not only that we see ride hailing, but even in categories such as high trust categories like buying digital gold today. 15% of the gold today gets bought digitally, right? So I think the ask clearly is going to be, and I agree with Mohit, I think brand resonance and trust is going to be extremely, extremely important. Contextual, is going to be the way forward, and I think things are going to be. We've all got to use information responsibly, AI responsibly for it to succeed, and I think that's going to make finance more effortless. And as I said earlier, intelligence, intuitiveness, and things are going to become more and more invisible. That's what we'll all have to focus towards to make this go forward.
I'll make it quick. I think over the next few years, AI will start taking decisions, and what that will lead to is less opportunity, less arbitration. Because right now, like picking on stocks or deciding a mutual fund or which credit card to use when is a matter of human choice. If we live in a perfect world where AI makes that decision, right, the opportunity to optimize will essentially be less. And I don't know, maybe it'll be super interesting in that kind of a world.
Sure, thank you so much. So to sum up, we'll be harnessing more infrastructure. I mean, we'll go beyond urban to ensure financial inclusion and to harness on the MSMEs. Then more trust in AI. Of course, AI is going to be the driving force, the trust in AI. The brand resonance and trust remains. That is not going away in 2030. And less arbitration and more opportunity. On that note, I would like to, open the audience for, raising specific questions to the panelists. Maybe just two questions, if you could quickly take up 2 questions.
That's okay. We'll be available outside.
Any question, maybe if anybody has a question.
I think अच्छा किया उसको red clothes पहना दिया वो डरा रही है.
You're treading on dangerous waters today. Yeah.
Hi, so I'll keep it brief, sorry. My question is specifically to Mr. Narayanan. My name is Shibani and I work for a behavioral design consultancy firm called Bias. One thing which came up very interesting is the duality between nudging towards contextual services and removing the frictions, right? So how do you think you'll manage the point where nudge starts to become a friction, that I'm getting too many notifications and it is overloading me with decision fatigue? Or when removing frictions causes unintentional converts or actually low value converts. So how do we manage that with AI and the speed?
Actually, data provides, I think even Anurag will agree, all of us, for instance, we actually look at diminishing returns, right? If we nudge you too often, right? The probability that you will, open the notification, take an action starts diminishing. Data provides a very clear and obvious demarcation of what is that sweet spot of, nudging you or a user, for instance. The key is that when we go overboard, right, and then you start seeing diminishing returns essentially come in there. The answer for a lot of us is purely about looking at it from a data perspective. We are very conscious of that. How often do we nudge you, give you a notification? So water will find its balance. We are getting kicked out. Folks, thank you so much.
Yeah, so before we are kicked out, we'll wrap up the session. And thank you so much, Anurag, Mohit, Pankaj and Sujith.
Thank you for an engaging and so informative session. Everyone, let's have a huge round of applause. And let's click a group picture.